Good afternoon to one and all present here. On behalf of the Postgraduate and Research Department of Commerce, Edraj College for Women, I take immense pleasure in welcoming everyone to the Dr.Mrs. Kousalya Moorthy and Justice M.N.Moorthy Endowment Lecture on the topic Union Budget 2025 and Overview. Let us begin the program with Tamil Taiwanese. I request all to kindly rise for the speaker.
நீராறும் கடலுடுத்த நிலவடந்து கிழிதொழுகும் ஈராறும் வதனமென திகழ்வரத கண்டமில்லை தெக்கணவும் அதில் சிறந்த திராவிடன திருநாடும் தக்க சிறு பிறை முதலும் தரித்தனரும் திலகமுமே அத்திலக வாசனை போல் அனைத்துலகும் இன்பமுற எத்திசையும் புகழ் மணக்க இருந்த பெரும் தமிழனங்கே தமிழனங்கே உன் சீரிழமை திறம்பியந்து செயல் மறந்து வாழ்த்துதுமே வாழ்த்துதுமே வாழ்த்துதுமே.
We now welcome our esteemed speaker of the day. Thank you. Next, I invite Ms. Srinidhi to extend a warm welcome to the gathering and introduce the distinguished speaker for today.
Good afternoon to everyone present here. It's with great enthusiasm that we welcome Mr. Sai Ajay, a practicing chartered accountant specializing in international tax consulting and business advisory services to our institution today to give an overview of Union Budget 2025. Mr. Ajay has an extensive experience in having worked with esteemed firms such as BPMA and VCAJ and Associates LLP. He currently holds the position of senior consultant at VCAJ and Associates LLP. We are privileged that you have graciously accepted our invitation, sir. His knowledge and insights will offer us a thorough understanding of the budget's implication and its effect on the economy. As a respected authority in his field, Mr. Ajay's lecture is to be sure informative, engaging, and thought provoking. And we are sure that Sir's presentation will inspire stimulating discussions and debates. I also extend a warm welcome to our esteemed heads of department, Dr. Gayatri, Head Department of Commerce England, Dr. Geeta Krishnan, Head Department of Commerce Self-Supporting, as well as our dear students. Now, please join me in giving a warm welcome to Mr. Sayajan. We eagerly await his enlightening lecture. Thank you.
Thank you, Srinidhi. It is now my honor to invite CSI Ajay, Senior Consultant, VCAJ and Associates LLP, to take over and enlighten us with your valuable insights.
Good afternoon, everyone. First of all, I would like to express my gratitude to the management for giving me this opportunity to share my thoughts and insights in this Union Budget 2025 and overview session. I would also like to thank the Postgraduate and Research Department of Commerce for organizing this event and the faculty coordinators, Dr. N. Nandini, Dr. Veena Murali, Ms. Sushma Catherine, and Ms. Anuja. India, currently in this unprecedented geopolitical scenario, given the war between Russia and Ukraine, Israel and Gaza, and the tensions between United States and the European Union, using its strong diplomatic ties, is navigating and continues to strive growth and development. In this context, the Union Budget 2025 becomes all the more important. We have to focus on stability, continuity, and consistency in our policies to ensure that our economy is strong and grow amidst the stagnant world economic growth. I would like to start from the basics. What is the budget? What are the factors influencing a budget? And why budget 2025 is now even relevant? Then we shall discuss the highlights of the budget, and I have also included Q&A sessions in between to make the session interactive.
So you want a pointer, sir? You want a pointer, sir?
I would like to hear from any one of you about what is a budget, what is your understanding of budget. Can anyone explain what is a budget and why there is a need for India or government of India to present a budget? Any idea, any thoughts? Shall I call someone to say that? Can you please just let me know what is your understanding of budget? Okay, no issues. So, what is a budget? The union budget is not just a financial statement of the government of India. So, I think everyone knows what is a financial statement, right? Profit and loss statement and balance sheet and P&L. That is balance sheet and P&L. So, the government of India will prepare its profit and loss account, notifying all the revenues, all the expenses, all the liabilities, and all the assets. And also, it will give the allocation of its resources, meaning all the income or all the receipts to sectors and policies. So, that is the gist of a budget. The Union Budget, also known as the Annual Financial Statement under Article 112 of the Indian Constitution, is the country's annual financial plan prepared by the Ministry of Finance. So I think everyone will be familiar with the person who's there in the picture, right? So anyone can tell me who's that? Yeah, very good. So she is presenting her eighth consecutive budget in the parliament. So it outlines the government expected revenues collected by the Department of Revenue and planned expenditure managed by the Department of Expenditure. The budget serves as a financial blueprint for the next financial year, that is 2025 and 2026. The Government of India presents the Union Budget on the first day of February to ensure its implementation before the commencement of new financial year. So I would like to also inform you that there will be in between Q&A sessions. I would request everyone to be attentive and I might call anyone to answer the questions. I will give options, don't worry. You have to just pick the option. So what is the process followed? So just like that, Nirmala Sitharaman ji will not come and present the budget, right? So first, a circular will be issued by the Ministry of Finance asking the departments to submit the estimates of revenue and expenditure. So once the circular is given, the departments will submit their estimates of revenue and income to the Ministry of Finance. Then the Finance Minister will review the workings and she will give go ahead for the order, draft order. Then the cabinet. Cabinet is nothing but cabinet consists of the ministers and the prime minister. So we have prime minister, home minister, defense minister, and all other ministries, and also the cabinet minister. The entire ministry will give approval of the particular draft estimate of revenue and expenditure. Once the cabinet gives their approval, it will be presented in the parliament on 1st of February. Once the budget is presented in the parliament, the parliamentary discussion happens in the Lok Sabha. And you might have witnessed that the leader of the opposition will oppose the budget typically in the parliament, and still the government passes the budget. Correct? This happens year on year. and then the president will give accent to the budget, and then the budget will get it finalized and the schemes will be implemented. So this is the typical process how the budget is prepared, how the budget is presented in the parliament, and the budget is only a proposal. When it becomes an actual is only when the president gives it accent. So there is a why the budget is presented on February 1st. Why not March 31st, that is the end of the financial year? Why not December 31st, end of the calendar year? So budget we all know is a plan for the next financial year, correct? So we are planning it on February 1st. And my plan, I will like my plan. You might not like. Correct? I will say this amount of money needs to go to Bihar. I will say this amount of money needs to go to Tamil Nadu. This amount of money needs to go to Uttar Pradesh. Nobody will give consensus to my plan. So there is a time gap of 2 months given to the parliament to discuss, debate the budget proposals, and once everyone gives the consensus, the president give action. So the 2 months time is for everyone to understand the budget proposal, and everyone will give their comments. For example, if some amendment happens in the income tax law, saying that from 1st April onwards, there is no basic exemption limit, every income will be taxable. No one will agree, correct? So the people have to give consensus. The representative of the people, that is the Ministry of, sorry, Member of Parliaments, have to give consensus to the budget document. That is the proposal. Budget, whatever presented in the budget is just a proposal. After getting the thoughts of everyone and hearing the discussions, the president gives accent to the budget proposal. Then it becomes the finance act. The budget presents the finance bill, and once the president gives accent, it becomes the finance act. So much like a household budget, our union budget also ensures that government spending aligns with its priority and available resources for the coming financial year. So we all have a finance minister in our home. That is your mother and my mother. And all the women in India is a finance minister because they prepare the budget every month at the beginning. Correct? So they will know where to spend the money, how to spend the money, and how to save, how to invest, and everything. So likewise, our government of India also have streams of income. First, the major income comes from GST and income tax. You can see income tax accounts for around 22% of the total receipts of the government, and GST accounts for 18% of the receipts from the taxes, tax revenue. And the major receipts apart from taxes are borrowings. So basically, the government borrows or collects revenue in the form of income tax or GST and spends it on the schemes or anything. We will see in the next slide the government spending. So as I said, the major receipts for the government of India comes from tax collections and borrowings. The major payments are towards state share of taxes. And you might be knowing that the state governments are fighting with the central government to get their fair share of taxes. For example, GST. We have central GST and state GST, correct? So, who is collecting the GST? The central government. Then the central government has to allocate the state portion of GST back to the state government. So, that share of state GST is mentioned over here. State share of taxes account for 22% of the total expenditure. And the interest payment. So the receipts are in the forms of borrowings, and the payments will be in the form of interest on borrowings. So 20% of the government expenditure goes on borrowings. And apart from that, we have schemes, central sector schemes, major subsidies, and those are account for 22 to 24%. And it is pertinent to note here that the government is majorly spending on defense as well. So, given the geopolitical scenario, a war between Ukraine and Russia, and a war between Israel and Hamas, and geopolitical tensions between United States and European Union and Canada, Mexico. So there is a unprecedented and there is no stable economic environment as well as the stable foreign relations. So in this period of time, it is very important to increase our spending in defense. So that is reflected in the 8% expenditure on defense. So this is the expenditure summary. As you can see, the defense spending is around 4.91 lakh crores and followed by rural development, home affairs and agriculture. Agriculture being the backbone of our country, it accounts for 1.71 crores. And followed by agriculture, our education spending is around 1.28 crores. I don't want to bore you with all the numbers, but what picture we need to understand over here is the government is spending more on defense here, and after defense it is more on rural development and agriculture. After agriculture it is on education. So this gives a broad prospect of what the government is thinking here, and the strategic allocation of resources is reflected over here. So first on defense, then on rural development and agriculture, then on education. So there are several factors affects a country's budget. One is microeconomic factors, another one is macroeconomic factors. So what are the macroeconomic factors? One is GDP growth rate. So why GDP growth rate is very important? Any government in across the world will have a goal or objective. So what is the goal or objective of India currently? So to become a developed nation by 2047. The government calls it as a Viksit Bharat, meaning a developed nation. So by 2047, it is the 100th year of independence. So to achieve a developed nation by 2047, the government of India needs to maintain a GDP growth rate at the rate of 8%. So currently the estimated growth rate for financial year 24-25 is 6.5%, and it is also estimated for the same number 6.5% for 25-26. So the government is under pressure to improve its GDP growth rate. So the GDP growth rate expected to be maintained is 8%. Currently it is at 6.5%. So this is one of the major factor influencing our budget. So accordingly, let's say if you want to increase the GDP growth rate, what should be done? So when GDP growth rate can be increased? It's very simple. You have to have money in your hand, disposable income to spend. Once you spend, the economy booms. Once the economy booms, you will naturally get the growth, whatever you want. Correct? So the government is focusing on ensuring that we have disposable income, more disposable income in our hand. That is the underlying theme in this budget, to ensure that middle class people having disposable income in their hand. Fiscal deficit and public debt. So the more the public debt, the more the interest on borrowings. So the government will be very likely to reduce this, but we are heavily investing in infrastructure. So that also poses a major factor influencing the budget. Global trade and foreign exchange reserves. So foreign exchange reserves and global trade is a very much and very integral part of a budget, because the global trade will decide the India's position in the trade. For example, now you all know who is the president of United States of America? Who is the president? Donald Trump. So what he is doing currently? He is threatening all the countries, saying that is going to impose tariffs. Correct? So how he is able to do this? Why he is threatening? Why our government is not threatening United States of America? Because they have a upper hand in trade. We have the United States is having trade deficit with India. What does that mean? So we are exporting more to United States than importing. Correct. So what Donald Trump is saying is, you balance the trade, or else I will impose tariff on you. Meaning, we have a trade surplus with United States, but for United States we have a trade deficit. So this major advantage is with India, but Donald Trump is having a huge economy. United States economy is accounts for more than $5 trillion economy, and compared to India, it's a very big one. We cannot balance the import and export equally. So that's the reason India is exporting more than imports. So that also plays a major factor in influencing a budget. Infrastructure and capital expenditure. Obviously, we have to improve our infrastructure to attract investment, foreign direct investment. So that is also a major economic factor. macroeconomic factors. So these are the microeconomic factors. So what is the major expectation from the finance minister over the past years? So can anyone let me know what is the major expectation from the finance minister from a salaried class angle to increase the basic exemption limit? We want more tax-free income, correct? So that pressure is also there on the government. So that is a microeconomic factor. Taxation policy, especially personal income tax. Sector-specific incentives. So the government is focusing on more startups and micro, small, and medium enterprises. That is also a major factor. Consumer demand and spending. Once the consumer demand and spending reduces, it is a vicious circle. If the consumer spending decreases, consumer demand also will reduce, and it goes on and on. So, consumer demand and spending is also a microeconomic factor over here. Employment and skill development is also a major microeconomic factor over here. So as I said, the government of India is aimed to make India a Viksit Bharat by 2047, 100 year of independence. To achieve this, government has to maintain 8% of GDP growth rate year on year. Currently, India's projected economic growth stands at 6.5%. Budget estimates for 25-26. Fiscal deficit is at the rate of 4.8% of GDP. So what is fiscal deficit? The one at the back who yawned now. Can you please say what is fiscal deficit? So fiscal deficit is nothing but we estimate the revenue sources, correct? And we also estimate the expenditures. If expenditure is more than revenue, it becomes fiscal deficit. So fiscal deficit is 4.8% of GDP currently. So to achieve Viksit Bharat by 2047, the government has these four powerful engines. One is agriculture to boost agriculture, MSME, micro, small and medium enterprises, investments and exports to boost investment and export. How these four engines can be operated? The fuel is the tax reforms, taxation and other reforms. And the guiding spirit is inclusivity. The ultimate goal is Viksit Bharat. This was the motto of Union Budget 2025. So this is a theme of Union Budget. So the theme that is the reforms in the following six sectors: taxation, power, urban development, mining, financial sector, and regulatory reforms. The focus areas are poor, youth, farmers, and women. So this is one of the Q&A. I'm going to ask this question. So the focus areas are poor, youth, farmers, and women. So MSME. You might think there are four focus areas, and I have mentioned the theme of the budget is six, but why I'm focusing on MSME here? So MSME is a boost to the Indian economy, and that is why we are going to discuss elaborately on MSME. So what is MSME? Micro, small, and medium enterprises. So for example, many of you are going to become not many of you will become an entrepreneur. Many of you will become salaried employee for corporate. Many of you will start your own startup or business or whatever you can do, you will do. So, what is the options available to you, and what are the incentives the government is providing for a business? That is very much important for you to understand on which path you are going to take. Whether you are going to become an entrepreneur or a businessman, or you going to become an employee in a corporate. So these areas will help you to determine or help you to focus on what is right for you. What is MSME? Micro, small, and medium enterprises. So currently, the investment and there are investment and threshold limit. Basically, what is MSME? Is small businesses. So the government is having definition of small businesses over here. Previously, the definition of this MSME was if it is a micro business, it should have turnover less than 2.5 crores. Small means 25 crores. Medium means 125 crores. If your business is having this much turnover, you will be categorized as micro, small, or medium enterprises. So now the government has proposed to increase this limit to 100, sorry, to 10, 100, and 500. So 10 for micro, 100 for small, and 500 for medium. So you may wonder why I'm reading all these turnover and all these units, correct? So what is the use? So the government is having, we have MSMED Act, Micro, Small and Medium Development Act. It says, what is the problem in majority of the business? We supply some products, we supply some goods, correct? For that we have to receive payment. We might mention sales 100 crores, and if you put bad debts 100 crores, what is the use of doing that business, correct? The majority problem is you have to receive the money for which you have given the product or render the service. So the MSME Act says that within 45 days of rendering that service or transferring the goods, you have to receive the payment. So the party who is getting the service from you has to mandatorily give the payment before 45 days. Else they will face the penal consequences. So this is the major attraction point for MSMEs to register under MSME. Let's say you are going to do a business down the line in 4 to 5 years. If you register under MSME, within 45 days you will get your amount for the services you have rendered or the goods you have produced or delivered to your client. So the government has increased the turnover limit from 2.5 crores to 10 crores, 25 crores to 100 crores, 125 crores to 500 crores. Or maybe you can remember like this 10, 100 and 500 for micro, small and medium enterprises. These questions are very likely to be asked in your interviews. Strengthened credit guarantee cover. So what is guarantee cover? So if you go to a bank and ask for loan, what is the first question they ask? Collateral. You have to give security. Nobody will believe this face and give money. Correct? Correct. Maybe some of your case they might give, but definitely not my case. So for micro and small enterprises, the guarantee cover has been increased from 5 crores to 10 crores. What does that mean? If you are a micro and small enterprises, if you go to the bank now and ask for 10 crores, you are going to get 10 crores without any collateral, without any security. And for startups, the guarantee cover has been increased from 10 crores to 20 crores. For exporters, term loans up to 20 crore will receive a grant support, guarantee support, enabling growth in your overseas market. So these are other incentives which will attract investors to begin businesses as a micro, small, and medium enterprises. Credit cards for micro enterprises. Customized credit card with 5 lakh limit for micro enterprises registered on Udayam portal. Schemes for first-time entrepreneurs. A new scheme aims to support 5 lakh entrepreneurs, 5 lakh first-time entrepreneurs from women, scheduled castes and scheduled tribes. This scheme will provide term loans up to 2 crores over 5 years with online capability building programs to enhance entrepreneurial and management skills. These are other incentives given in our budget for MSME. Education and skill development. So basically, I would like to explain it in a brief manner. We have IIMs, we have IIS, correct? Indian Institute of Technology, Institution of Science. Like that, the government last year proposed for Indian Institute of Accountancy as well. But it was proposed, but no other major change was introduced. So the government is now planning to develop 5 youth centers to train youth with global skills. 6,500 more seats through additional infrastructure in post 2015 IITs. 500 crore fund for an AI center of excellence. 50,000 new. Okay, all these are given. I will tell you what is the major points. One is the government has planned to uh, high-speed internet for all secondary schools, focusing on rural areas, and then digital educational content in Indian languages, and Saksham Anganwadi and Poshan 2.0 to benefit over 8 crore children. Basically, I wanted to include this slide because it was one of the major amendments, but this is not related to us. You can skip this. Not an issue. Startup and employment initiatives. I will discuss startup at a later point of time, but I would like to touch upon the incentives given by government apart from tax angle. So socio-economic upliftment program, labor-intensive sectors, and National Institute of Food Technology, Entrepreneurship and Management in Bihar, Social Security for gig and online workers, PM Swanidhi scheme are some of the schemes which are introduced for employment initiative and startup initiatives. Infrastructure highlights. As I said, the government is going to heavily invest in infrastructure, and uh, some of the infrastructure initiatives are 11.21 lakh crores allocated for infrastructure, with 1.5 lakh crores in 50-year interest-free loans to states. Transport and connectivity, expansion of Udan scheme, including 120 new destinations, 4 crore passengers, and 25,000 crore maritime development fund for port infrastructure. Digital push, boost to telecom with rural broadband expansion and 500 crore AI Center of Excellence, targeting 100 gigawatt nuclear capacity by 2047 and increase funding for Jal Jeevan Mission to ensure clean water access. So we would like to move on Q&A session. So you have listened to the lecture now. So do you have any questions? If you are not going to ask question, I will ask question. Yes, please. Good afternoon. Yes. So the government has announced a few initiatives last year in the budget 2024. So what they have announced is the government will enable they will ask the big companies like L&T and other corporate giants to give all the employees, or sorry, all the students internship program with along with the fixed stipend or stipend or salary. So that is the initiative they have taken. But currently in this budget, there was no specific announcement with respect to employment generation. They focused on mostly increasing the disposable income in the hands of middle class. Thank you. Yes, please. So India is a country which has its policy known as non-alignment. So if you see, let's take the government of Canada last year or 2 years back. It was a very thriving economy. Suddenly, when it got into feud with United States, and their economy went into a rubble, kind of very difficult situation for the Canadians. Even for breakfast, the inflation is sky high in Canada. This is the condition of a developed nation. I'm not talking about even a developing country. So India is a country which has non-alignment, which will talk to China, Russia, United States, European Union, UAE, even the South Africa. So that is a unique position we have, and we are leveraging on it. So we cannot compare our budget with any other country because the currently the world economy is stagnant. It is not growing at the rate which we are growing. So India is doing pretty good compared to other economies, especially developing economies. Yes.
How is the revenue distributed to state government and also central government? And why it is not distributed to equally to other states also?
So that is a media-centric, politically motivated question spread by the parties. So there is a mechanism. The finance minister will not allocate any funds directly to the state. So there is a department which does that. So they have to allocate the funds to state government, and it cannot be just like that stopped by the finance minister. It is not under control. So it is being done fairly, but at the same time, there is a yeah. Again, I said there is a politically motivated pressure points between the government, central government and the state government. But the allocation is done fair at the not 100%, but the allocation is done fair.
So, how can government make sure that the agriculture and rural development, how the fund is allocated, and how can we supervise that they have actually received the funds allocated to them or not?
Correct. So this is a typical problem in India because of all the nepotism and the corruption. But currently, what is happening is we are moving into a digital economy, and the benefits are directly given to the bank account of the benefit holders. So that is one thing. Digital economy is a big push, and this will reduce all the nepotism and corruption. And the credit guarantee cover given by the government. So you might see that the government is not directly giving cash to the farmers or anyone, correct? So that is not the policy of the government. So the government is aiming at giving support to the farmers by improving the economy as a whole. For example, in agriculture, the pulses and ural dal, or for example, some other pulses. So they are focusing on more export of those pulses. If the export of pulses increases, naturally the demand for those pulses will increase. Indirectly, the farmers will get benefit out of it. So that is the policy of the government, giving the benefit indirectly rather than giving directly. So that's how they are, tackling it. Yes.
The main concern raised about the Union Budget 2024 was it emphasized on short-term economic growth, then the long-term systematic structures.
Okay.
Do you think the Union Budget is looked into this issue?
So the union budget currently focused on, as I said, improving the disposable income. So as you said, it is not a short-term relief. Rather, this cannot be reversed in any time soon. Correct. Once the government of India announces that up to 12 lakh there is no tax, after 2 years they cannot say up to 5 lakh only there is no tax. 5 to 10, 12 lakhs you have to pay tax. They cannot reverse that position. Correct. You accept that. Correct. So that is not the case. Obviously, this is short-term relief. The long-term relief will be, they are even planning to abolish direct tax. They are planning to bring in expenditure tax. So these are long-term goals of the government. So they mostly taxation policy. The government will try to align with global economies. So that's why the government has reduced the corporate tax rate from 30 to 15% for specific companies to make our market more competitive to the foreign market. So that's how the policy goes.
Thank you.
I heard the voice, but I couldn't see. Yeah, please, ma'am.
Sir, thank you so much for the excellent session, sir.
The session is not concluded. We are only 25% through. I'm going to talk about tax. Yes.
Yeah, I have a question of this 25%.
Yes.
So this is not a question. I just want to hear from your opinion that for each and every year the budget is allotting some increased percentage on the entrepreneurship and the employment and all that.
Yes.
So when it comes for the banks, they are showing that unclaimed or unapproached amount, or you can say that some unused amount under the entrepreneurship. Why there is a lag between these two? Because the government is putting all their efforts to bringing up the entrepreneurship, and the entrepreneurs are approaching the financial institutions to get some financial assistance. But there is a mismatch in this figure.
There's a gap.
Yeah, there is a gap. So why is it so, sir?
Two reasons. One is the lack of awareness of what is the scheme proposed by the government and what are the entrepreneurs are asking for. So there is a gap because of lack of awareness. That is one. Two is you have to have a particular structure to avail certain mm, incentives or any, for example, guarantee cover or any allocation from the government. We have to have a particular structure. Entrepreneurs, for example, we have a section called 80 IAC where the startups are given tax exemption. We don't have to, startups don't have to pay tax for first 3 consecutive years because generally in first 2 years of operation we will have losses, and those losses can be carried forward. But for first 3 years, the startups need not pay tax. But the definition of startup given by the government of India is different. You have to have an innovative idea. Entrepreneurs need to satisfy those particular conditions. Only after satisfying those conditions, they can avail the benefit. That is where the gap is there. So, entrepreneurs or the startups or anyone for that matter who wants to avail the benefit, they have to satisfy the condition. So, because of lack of that awareness and non-satisfaction of those conditions, there is a gap between the resource allocation and the resource which they have availed, the benefit they have availed. Yeah. Yes. So that would be the last question. Uma,
Good afternoon, sir.
Q&A is there. 1 second. Sorry for waiting. Yes, please.
Good afternoon, sir. My question to you is, though we have many tax reforms in the Indian economy, a major portion of money is being unaccounted for. So, how do you tackle, what can be done by the government to tackle the black money and tax evasion?
So the government has introduced various schemes. Post demonetization. Demonetization was one of the key development by the government of India to abolish black money. That is one thing, and push for digital economy. Today, are we using cash for paying anything to vendor? We are using UPI, correct? And the UPI is not there in United States or European Union. This kind of developed unified what to say digital push is not there in the United States or European Union. So that is one thing. So digital economy push is one of the answer for your question. Apart from that, abolishing that black money, life is going on, so I cannot answer directly. But the persons who are you know uh, drafting the law, so they might there is a management overhead of control. There might be. So that is that needs to be taken care in the long run. That will be taken care, I presume. So I would say post 2014, the circulation of black money has reduced to significant extent, and this will continue. So this is my expectation.
Good afternoon, sir.
I have to complete my session.
Yeah, we can have Q&A at the end.
We can have. Can we have a Q&A at the end?
Yeah.
Okay, you asked your question. That's the last
One last
one.
question. That union budget makes an impact on tax evasion and black money.
Union budget doesn't discuss about anything like that on tax evasion and black money, but we have Black Money Act separately that was long back introduced in 2015 and implemented in 2016. So already it has been taken care, not necessarily in the Union Budget 25-26. So moving on to the much awaited taxation amendment. So I think everybody knows what is the amendment in taxation. So what is the amendment in tax? So what is the thing which made Finance Minister Nirmala Sitharaman liked by everyone? What was the announcement? 12 lakhs, up to 12 lakhs there is no tax. Correct? So if your income is 12 lakh 100, what is whether you will pay tax or not? You will pay tax on that 100 rupees. No, you will be paying tax from 4 lakh to 12 lakh 100. Meaning you will be paying tax on 8 lakh 100 rupees. We should be well informed that it is a rebate available to the salaried employees up to 12 lakh there will be no tax. But the slab rates are given below. Up to INR 4 lakhs there is no tax. 4 lakhs to 8 lakhs, that is income is increased on 4 lakhs. 4 lakh to 8 lakh, 8 lakh to 12 lakh, 12 to 16, 16 to 20, 20 to 24 and above 24. The slab rates are 5, 10, 15, 20, 25 and 30. So this is a major leap given by the government of India to the salaried middle class. So this is also, as I said, to boost the disposable income in our hand, so that we will spend more, so that there will be more demand, there will be more supply, there will be boost to the economy. So that is the idea behind increasing the income tax slab rates. And reducing the slab rates. Sorry. And another important announcement in the budget, for example, may I know your name? Your name? Yes. Arun Tamil. So Tamil is having two house properties. So she is occupied in one house property, and her parents are occupied in another house property. So government what says is you can occupy in one house property, another house property you have to mention it as deemed letter. So before moving into those technical things, I would like to ask you one question. So what are the five heads of income under Income Tax Act? I heard till house property. What was the third one? Profits and gains from business or profession. Fourth one? Capital gains and others. Okay. So under house property, there is a provision that says that if you have one house property, you don't have to pay tax. If you have two house property, one house property is deemed let out. You have to show deemed annual rent and you have to pay tax on it. That was the previous thing. Later, the government said if you can even have two self-occupied property and one house property you are occupying yourself and another house property needs to be used for business or profession. Now the government has clarified that you can have two house property. You use it or you don't use it. You use it for business or you stay or your friends can stay. You don't have to pay tax. That is a clarification given by the government of India. So this is one interesting amendment. So direct tax code. Currently, we have Income Tax Act 1961, and the government has proposed to introduce new Income Tax Act 2025. What is the purpose of doing this? Is the Income Tax Act currently is having a lot of provisos, lot of explanation, making it complex and difficult to understand. So they have introduced the new Income Tax Act 2025, wherein the language will be simpler. They said the language will be simpler, but I've gone through it, but I don't think so. It has similar language only. And these are the objectives by which the government has proposed to introduce the Income Tax Act 2025. Personal income tax reforms with special focus on middle class, that is the reduced slab rates, encouraging voluntary compliance, reducing compliance burden, use of doing business and investment. So we are expecting the new Income Tax Act very likely before April 2026. Business taxation startups. For startups, what are the incentives given by the government of India? So we have one section called 80 IAC. It says that if you are a startup and you are a corporate, you don't have to pay tax for the first three consecutive years. You don't have to pay tax for 3 consecutive years in the first 10 years of incorporation. Let's say Tamil is incorporating a company in 2025 and she has an option till 2035. She can select any 3 years For example, she selects 2032 to 2035. She doesn't have to pay tax for that particular 3 years. That option is given under 80 ISE. This is the benefit available to a startup. 80 ISE was introduced in 2017 and with an initial sunset date on as of 31st March 2019. So they introduced this section in 2017 and it was supposed to end by 2019. The government is still now extending the due date and it is now currently extended to 31st March 2025. And the budget they have proposed to extend the limit to 31st March 2026 as well. So this is the amendment in 80 ISE. Corporate reorganization. So for a salaried employee, what will be taxed? The salary income. For house property, rental income. For a corporate, what will be taxed? Profits. So how profit is computed? Sales minus expenses. Let's say your sales is 100 and what's the name of the person? Can you know your name? Yes, you. Oh, நீங்க சொல்லிட்டீங்க பின்னாடி. Okay, Pavitra. Okay, Pavitra is starting a company. Pavitra has sales of 100. Okay, 100 crores. And her expenses are 120 crores. So now we have a loss situation, correct? So let's say Pavitra is continuing the business and the second year she is having a sales of 100 crores, expense of 80 crores. Now she is having a profit of 20 crores. Does she have to pay tax on the 20 crores? No, because she had previous year she had lost. No, she can set off the loss with the current year profit 20 crores. So this provision is there in the Income Tax Act. So now let's say Pavitra started her business in 2000 in the year 2000 and her loss was accumulated to 20 crores. Now in 2025 she is earning a profit of 20 crores. Can she set off the loss from year 2000? No, because there is a cap limit of 8 years. She can only utilize the loss within 8 years of incurring that loss. There is a provision. Now, what the companies did was, let's say there's a company, what is your name? நீங்க நேம் தானே இல்ல நீங்க இல்ல நீங்க கவனிச்சீங்க நீங்க திரும்பி பாக்குறீங்களா Bhumika. Okay, Pavitra. So Pavitra is there and Tamil is there. Okay. So Pavitra company is having losses, and it is the 8th year. Okay, 8th year she's having loss of 450 crores, and Tamil company is having a profit. Okay. So Tamil company is having profit of 300 crores. So what they both are discussing is what we will do. We will both merge both the companies. So there is a provision in income tax. It says if you merge two companies, you will get fresh 8 years of carry forward of losses. So what they will do, Pavitra will sell the company. She had 450 crores loss, no? So that for that 450 crores, she will fix a purchase consideration and sell the company to Tamil. So this thing was happening for last decade, and companies were selling themselves for the losses they had, but not for the synergic effect or for business reason or commercial reason. So to prevent that, Income Tax Act has said that we cannot carry forward losses in case of amalgamation. That eight fresh years of carry forward of losses from effective today is not available. So this is one of the major impact in mergers and acquisition sector. We have concept of significant economic presence. For example, we have domestic companies, we have foreign companies, correct? So domestic companies are required to pay tax at the rate of, let's say, the common tax rate in India is 30%. Foreign companies, 40%. So generally, what people will do is they will set up a company in foreign, and they will have all the operations in India, and they will not register as a foreign company in India, and they will not pay any tax. So to curtail this, the Income Tax Act brought a concept of significant economic presence, wherein they said if you have significant economic presence, you be treated as a foreign company, you have to pay tax. So that they given a clarification that profit attribution related to significant economic presence has been clarified. How will you attribute the profit to that particular significant economic presence? For example, there are two businesses. Pavitra is having one business and Tamil is having one business in outside India. Let's say one of the business is happening in India, but they are not registered in India as a foreign company. So now the assessing officer will say, for the business Tamil is doing in India, you have to pay tax. So how you will calculate the tax for the particular profit attributed from Tamil's business, given that they both have a single entity name. So that is the clarification they have given in the budget amendment. Presumptive taxation for non-resident service provider in the electronic sector. So there is a concept called presumptive taxation. Any of you heard of it? Heard of it? Presumptive taxation? Okay. So what presumptive taxation is saying is, let's say if your turnover is less than 2 crores, generally what companies will do is you have to maintain books of accounts. You have to put journal entries, you have to prepare financial statement, you have to compute your sales, expenses, profit, and then on that profit you have to pay tax. This is the normal scenario, correct? So for the government has brought one provision saying that if your if your sales or gross receipts is less than 2 crores, you don't have to do all those stuff. You don't have to maintain books of accounts. You don't have to do tax audits. You have to just pay 8% of your gross receipt as profit. You have to compute. What's your name? Huh? Leka. Leka is having a business and Leka is having turnover of 1.5 crores. Or we can have 2 crores for ease of calculations. So 2 crores into 8%. What is 2 crores? 8% of 2 crores? 16 crores. 16 lakhs, correct? So 16 lakhs is the profit. She doesn't have to mention what expenses she has done and all those tax audits and books of accounts maintenance is not required. She just have to say, report to income tax authorities that 2 crores is my turnover. Only 16 lakh is my profit as per presumptive taxation scheme offered by the income tax department, and she has to pay tax on that 16 lakh. 16 lakh is not your tax liability. 16 lakh is your profit. 16 lakh into Leka is an individual, so she has to pay based on her slab rates. Let's say she's falling into the bracket of 30%. 16 lakh into 30% is a tax liability. So this is the presumptive taxation scheme introduced, which is already is there in the Income Tax Act. So now the government has introduced presumptive taxation, this is for residents, and the government has introduced for non-resident, particular to electronic sector. What they are saying is non-resident service provider offering technology and services for establishing and operating electronic manufacturing or related facilities will have 25% of the gross amount deemed as the profit and gain of business of promotion. Basically, 8% for resident. If you are a non-resident and doing business in electronic sector, it is 25%. Okay. So we have a concept of transfer pricing. Transfer pricing is a niche area. So what transfer pricing says is, let's say I want to take an example. Let's take someone from the last row, first person. No, not sorry, the next person. May I know your name, ma'am? Bhavani. And the person next to you? Huh? Esther. Bhavani and Esther are relatives. You can say. So Bhavani is in India, Esther is in United States of America. Okay, both are doing business. Esther is doing software development, and Bhavani is helping her in India. So these two guys, these two guys are related parties, correct? Income tax have a separate definition of related parties. They are called as associated enterprises. So what Income Tax Act says is, if you are a related party, that is associated enterprises, and you have the transaction between the related party has to be at arm's length principle. The transaction between you, Esther and Bhavani, correct? So has to be at arm's length rate. So what is arm's length rate? Let's say Bhavani and Esther are independent third parties. So whatever transaction happens between them will be at arm's length, correct? In market terms. If my related party is there, I will sell it for a lesser price, correct? So what happens is, let's say India has a taxation of 30%, and Dubai has no tax. It's a tax haven, or Mauritius for that matter, is a tax haven. What people will do is everyone will sell to Mauritius. There is no tax there. Everyone will shift their profits to Mauritius. So eventually, Bhavani and Esther will evade tax. To prevent this, the government of India has brought the concept of transfer pricing. It says that the transaction between related party has to be at arm's length principle. So the government has brought in a concept of block assessment. It says that if the transaction is similar over the period of years, let's say 3 years, the assessing officer or the income tax department need not scrutinize it for continuously. Let's say there's the same transaction, and let's say Bhavani and Esther are selling some goods. For one particular year, the income tax department verified it and said that your transaction are at arm's length rate. Okay. Now the act is saying that for next 2 years, why are you disturbing the assessee? If they are declaring the same income, same transaction, you don't have to disturb them. You can just conclude that they are connected block assessment and there is no issue with that part. So they are maintaining their transaction at arm's length. So this is a new concept introduced by the department. IFSC and funds. IFSC is International Financial Service Sector Center. So what is IFSC and what is GIFT City? Gujarat Information FinTech City. Uh, so the government of India has introduced this concept of GIFT City, and majorly for financial transaction and financial markets. What happens is we have a concept in GST saying that SEZ and DTA units. Are you aware of SEZs? Special Economic Zone. Okay, so they are not considered a part of India. Whenever we sell something to SEZ unit, we say it is export. Likewise, if IFSC units are not part of India, even though it is situated in India, we say it is not a part of India. It is outside India, and we have given the government of India has given significant tax benefits to them. So, like startup, IFSC units are also having tax benefits. For example, ADLA. So, let's say. Your name, please. Not you. நீங்க தான் உங்க பின்னாடி இருக்காங்க. Shweta. Shweta is incorporating an entity in IFSC unit. Okay. So what the government of India is saying is, Shweta, let's say you are incorporating an entity in 2025 for the next 15 years. So you can choose any 10 consecutive years and you don't have to pay any tax to the government of India. So that don't have to pay any tax means the quantum of transaction happen in IFSC units is humongous, and the benefit given to this IFSC units are very attractive. And nowadays, many entities are incorporating their entities in IFSC units, especially in GIFT City, which is located in Gujarat. So tax exemption for IFSC unit. So typically, I have told IFSC units are there, and government is providing tax incentives. So what kind of transaction happen in IFSC units? So one is I have said financial transaction. So the trade and logistics are very much important for a country, correct? So what happens is I will give a layman's example. Uh, let's say this bottle is there. Let's say we don't have manufacturing capability here, we import this bottle, correct? So to import this particular product, we need to have logistic support, we need to have ships, we need to have aircraft which will help us to transport this cargo. So now the government has said that uh, the persons who are owning those ships, owning those aircrafts, can come and incorporate an entity in this IFSC unit. So from this IFSC unit, You will lease these ships or aircrafts to any person who wants to import or export their products. So the income from leasing that ship or leasing that particular aircraft will be exempt from tax. Instead of paying the freight charges, they are say we are leasing the entire aircraft, leasing the entire ship to the party who wants to import it, or the shipping line who wants to transport the goods. So this leasing transaction is a financial transaction. This is exempt from tax, and this is given under 80 LA. And apart from that, we have 1040 and 104F, which exempt certain income for non-residents. Now Q&A. So the income limit up to which no tax shall be levied for financial year 24-25 is, what is the income? Yes, please. Who said 12 lakhs? You said no. Ah. Who said 7 lakhs? Please give her a big round of applause. Correct. So whenever some of your relative asks, up to 12 lakhs I don't have to pay tax, right? You said stupid, that is for next financial year. For this financial year you have to pay tax. Up to 7 lakh only there is no tax. As a commerce student, we should be very keen and we should be able to answer these questions, especially among our relatives. Correct? Okay. The income limit up to which no tax shall be levied for financial year 25, 25, 26 is 12 lakhs. Okay. Up to how many house property can an individual claim as self-occupied property? What is the tax benefit available to a startup under 80 IAC? Startup. Correct. 3 consecutive years. For how many years a corporate can carry forward losses? 8 years. Just additional information. So losses are of two types. One is business loss, one is unabsorbed depreciation. Only business loss can be carried forward for 8 years. Unabsorbed depreciation can be carried forward n number of years. There is no limit in that. Presumptive taxation for non-resident in electronic sector allows dash percentage of gross receipts as profits. 25%. What is the tax benefit available to a IFSC under Section 80 LA? Start IFSC units. I took the example of Shweta. Shweta, do you remember? Give her a big round of applause. Okay. TDS threshold. Okay, we are nearing the end of the session. Don't worry. TDS threshold rationalization. So, how many of you are aware of the concept of TDS? Tax deducted at source. Very good. Can I explain it in a simple manner? Okay. For that, I need the example of two people. Yes. Yeah. நீங்கதான். உங்க name? சரி. ஸ்வேதா. நீங்க நிவேதா. Okay. அவங்க பேரு? விஷ்ணுபிரியா. Niveda. Niveda and Vishnupriya. Okay. Niveda, let's say Niveda is a professor in Ethiraj College. She's earning 2 lakhs per month. So what is her annual income? 24 lakhs. So for this she has to pay tax to the government. What Niveda does is she's abscond. She's not paying the tax to the government. So now Nirmala Sitharaman saw this girl and actually this is not a concept introduced here. This concept is there long back. So I just wanted to have a brief introduction about TDS. So what Nirmala Sitharaman said is, okay, Niveta, you will not pay tax after the end of the financial year. Typically for a financial year FY 24-25, a person has to pay tax. They have to file the income tax return on 31st July 2025. Okay, that is the provision. So if she is not paying tax on 31st July 2025, so what Nirmala Sitharaman said is, whenever you earn income, you pay the tax to me. Why wait till end of the financial year? After 3 months, you file the return and pay tax. So this month you earn income from April 2024 2 lakhs. you pay 30% to me. Like that, she introduced the concept. And Nirmala Sitharamanji didn't believe her to wait till end of the financial year and pay tax. Why will she believe now? Correct? She will not pay tax. So Vishnu Priya, right? Ah. So she is the college person. She is the management. So Nirmala Sitharamanji asked Vishnu Priya to deduct tax. You don't pay tax to me. The person who is paying the payment to Niveta has to deduct tax and pay it to the government. The ultimate responsibility fell on the person paying the amount. So that's why it is called tax deducted at source. You are paying tax at the event of generation of the income. So that's why it is called TDS. So there are n number of cases, n number of transactions happening across corporates, correct? So there are particular many sections starting from 192, 194A, B, C, from A to Z. We have a lot of sections. So people are fed up with those all those sections, and the government has decided to rationalize all the tedious sections. So I have given a lot of sections over here. I'm not going to discuss each and every section. Rather, I'm going to discuss important sections which you should know. First section is 192. So basically, the section under which all your professors and lecturers pay tax to a government of India. So that's not paying tax. Tax deducted at source section. Section 192 TDS on salaries, and you have something called 194C TDS on contracts. So any contract entered into between two persons will be tax. You have to deduct tax. Any payment towards it at the rate of 1% for individual, 2% for corporate associate. And apart from that, you have something called 194A interest on securities. So we have apart from that 194A, we have 194C, its commission is there, and whenever someone makes sale to another party, when the sale exceeds 50 lakhs, they have to deduct tax at the rate of 0.1%. And for rental, there is TDS, you have to deduct TDS. If your rental income exceeds 2,40,000, the person to whom the rental is being paid, they have to deduct tax at the rate of 10%. And fee for professional or technical services, 194J. For any professional services, 10% TDS has to be deducted. Like this, there are a lot of sections. For even for cash deposit more than 2 crores, TDS has to be deducted. So there are a lot of sections the government is focusing on reducing this and rationalizing it. As a first step, they have increased the threshold limit. For example, rent. What I discussed that up to 2 lakh. Sorry, if your rental income. Sorry, if your rental payment is more than 2,40,000, you have to deduct tax. Now the limit has been increased from 2,40,000 to 6 lakhs. So this is a significant move by the government. Apart from that, there are small increase in the other sections from 30,000 to 50,000, 10,000 to 15,000. Likewise, there are a lot of increase. So meaning up to 6 lakh, you don't have to deduct TDS. That is the takeaway for 94I rent. And another interesting concept which I would like to everyone to listen and understand is extension of time limit for filing updated return. So let's take the example of Niveda. So she didn't file the income tax return for financial year 24 25, right? So for past 4 years also she didn't file. So the government has come up with a scheme called updated return. So even if you have not filed your income tax return, you can file the return for last previous 4 years. But there are some conditions. You cannot claim loss, you cannot claim refund, but you can just pay the show the income and pay tax. That is there, but you cannot claim refund or loss. That is there. So the previously it was available up to two previous year. Now it has been extended to last 4 years. Trust. So there are minor amendments in trust as well. So organizations which are with charitable purpose doesn't have to pay tax, even though they will be coming under business or profession. For example, do you think Ethiraj College is paying taxes to the government, income tax? Yes or no? No. There is a section 1023C6. which says that institution for education purpose doesn't have to pay tax. Okay, so colleges will come under section 10, 11, and 12, under which they will not pay tax. They are not required to pay tax. Education is a service. Okay, so they have brought rationalization for many of the provisions of charitable institutions, which says that once you get a registration for a trust, within 5 years you have to renew the registration. This period has been extended to 10 years. Likewise, there are a lot of small rationalizations happened in trust taxation. Other amendments, cryptos and VDAs. So the government has, so generally, let's say, what is your name? Yeah, you want. நீங்க இல்ல பின்னாடி சரி நீங்களே சொல்லுங்க திவ்யதர்ஷினி ஓகே Divya Darshini got a lottery ticket from Kerala and won 30 crores, or let's say 100 crores. So what is that? Whether she needs to pay tax, whether it will come under salary, house property, business, capital gain, other sources, it will come. That's why we have other sources. So she won the lottery for 100 crores. What is the rate of tax she has to pay? Correct. On cashful income, 30% of tax is required to pay. The government is treating all the income from crypto assets and virtual digital assets as a cashful income, and they are taxing at the rate of 30%. And even that 30% needs to be deducted at source. TDS section is also there, and taxation provision is also there, and the rate of TDS and tax is 30%. So they have introduced a section 285 AA saying that crypto asset regulation, a new provision requiring reporting entities to report crypto assets information in a prescribed format. They even want you to report your crypto asset information in your income tax return. And clarification on VDA. VDA definition is clarified retrospectively to include digital representation of value using blockchain or similar technology. Okay. GST. So GST, I don't want to discuss in detail regarding the amendments, but one particular amendment will help us to discuss entirely the concept of GST itself. What they are saying is suppliers cannot reduce their output tax liability to a credit note unless recipient reverses the input tax credit and the tax is not passed on to a third party. So for this, I need two people. What is your name? Shavani. Another person? Okay, யாராவது சொல்லுங்க உங்க பேர் சொல்லுங்க Gayatri. Shalini and Gayatri is there. Okay, so now Shalini is selling some goods to Gayatri for let's say 10 lakhs and GST at the rate of 18%, which comes to wait only the numbers are. Shalini is paying, so Shalini is selling to Gayatri for 10 lakhs. So GST is at the rate of 18%. What is that GST liability? 1,80,000. So now what happens is Gayatri says, I don't like your goods, take it. Okay. So typically what happens when a particular person sells the goods and a particular person purchases the goods? It's the same transaction. Generally what happens is in GSTR1, the particular person will mention the transaction which is necessarily the sales. This will get reflected in 2B. GSTR1 is the sale transaction. For example, it is a sale for Gayatri and will become a purchase. Sorry, this is sale for Shalini. It becomes a purchase for Gayatri. So the person who has paid the amount, she will take input tax credit. Correct? She has paid the tax now, so she can take input tax credit against it. Whenever she makes a sale, she can take the. She has to pay, on sales. You have to pay tax to the government. On purchase, you have to pay tax, but you can claim it as a credit against the output tax liability. This is the concept. And let's say the sale has been cancelled because Gayatri and Shalini got into a feud and they don't want to enter into any transaction in future. So what they are saying is the supplier, that is Shalini, cannot reduce their output tax liability until Gayatri reverses her input tax credit. First, Gayatri. Gayatri has to reverse her input tax credit, then only Shalini can reverse her output tax liability. So that is the new provision government has brought in. Apart from that, rest of the provisions are procedural aspects. Custom duties. Custom duties also. What is customs? So basically, we were discussing about tariffs, no? So Donald Trump is threatening everyone to impose tariffs. So that is customs. Whenever someone imports something, the government of India imposes tariff on it to protect the domestic buyers. So that is one thing. Whenever we export, we will not attract it. There is no tariffs or there is no duty. Even if you pay GST, you can claim a refund. So that is there. So the government is promoting export and not encouraging imports to have a favorable trade. So the government has reduced certain custom duties. Custom duty will be fully exempt on 36 life-saving cancer drugs, and few goods are exempted from levy of social welfare surcharge. And duties will be removed on cobalt powder, lithium-ion batteries, scrap, lead, and zinc. So why they are doing all this? They have reduced a lot of duties on certain minerals. So basically, we are entering into vehicles, you know, battery instead of using the electricity, everyone is moving to e-vehicles, and Elon Musk has come. He wants to introduce Tesla in India. So all these are happening. So a major important aspect in automobile industry is happening, and the important component is batteries. For this batteries, what you need is aluminum and lithium. So the government is reducing the custom duty rates for those particular items so that we can import it cheaper and we can produce the components for encouraging E sector, EV sector. Q&A. Tax is required to be deducted if the rental income exceeds 6 lakhs. 6 lakhs. Income tax return can be filed for. The validity of approval under Section 12AB will be extended to dash years from the previous 5 years. Any more questions? Okay. Okay. We are now nearing. We have already ended the session. This is just criticisms on union budget. So what critics are saying? Economic and fiscal concern, slowing GDP growth, no bold initiative to counter economic slowdown, tax cut may limit revenue, raising deficit concerns, unequal state allocation, someone has pointed out this, favoritism towards select states like Bihar, ignoring others, something like that. Inheritance tax on forms. So many people were thinking that they might introduce inheritance tax as well, but the same is not announced yet. It will not be announced very likely. Spending concern. Global allies push for higher defense spending despite fiscal constraints. We also discussed about the defense spending as well. Thank you. Between the tax that, that's what it is.
You ask the girls.
Thank you, sir, for the enriching session on Union Budget 2025. Your comprehensive analysis of the Union Budget 2025 has deepened our understanding of its implications for the economy. I now call upon Ms. Baladashmi to convey our heartfelt gratitude.
Coming together is a beginning. Keeping together is progress. Working together is success. Henry Ford. Good afternoon and a warm welcome to everyone. It is my privilege to propose the vote of thanks on this special occasion. On behalf of the Postgraduate and Research Department of Commerce, Etraj College for Women, I extend our heartfelt gratitude to all those who have contributed to making this program a grand success. First and foremost, our sincere gratitude to the Divine for the blessings bestowed upon us and to our esteemed founder, Shivi and Etiraj, whose blessings and vision continues to guide and inspire us. I extend our heartfelt thanks to the distinguished resource person, CSI Ajay Sir, Senior Consultant, VCAJ and Associates, LLP, for sharing his invaluable insights and expertise. Your enlightening session has truly enriched our knowledge and broadened our perspectives. Heartfelt gratitude to the management led by Revered Chairman Tirviya Muralidharan Sir for his support in all our initiatives. I would like to express sincere thanks to our principal, Dr. S. Uma Gauri Ma'am, Vice Principal Vijaya Ma'am, and Vice Principal Self-Supporting Jayanti Ma'am for their constant support and encouragement. I wholeheartedly thank Dr. Beulah Ma'am, Head, Department of Corporate Secretaryship Aided, Dr. T. Ushapriya Ma'am, former Vice Principal, Self-Supporting and Head of Department of Bank Management, and Dr. Geeta Ma'am, Head Department of Corporate Secretaryship, Self-Supporting, for their support. I extend our sincere gratitude to Dr. A.S. Gayatri Ma'am and Dr. Geeta Krishnan Ma'am, Heads, Department of Commerce, for their invaluable contributions, guidance, and faith in our potential. I also thank our respective faculty members for their unwavering support and cooperation in organizing this event successfully. I thank Mrs. Shobana T, Assistant Professor, Department of Commerce, Self-Supporting, for the technical support extended. I extend our heartfelt thanks to the faculty coordinators, Dr. Nandini Ma'am, Dr. Veena Murli Ma'am, Ms. Shushma Katran Ma'am, and Ms. Anuja Ma'am. I express my gratitude to the students from the Departments of Commerce, Aided and Self-Supporting, Department of Corporate Secretaryship, Aided and Self-Supporting, and Department of Bank Management for their active participation and enthusiasm. Once again, thank you all for being a part of this wonderful occasion.